All right, everybody. Thank you so much to that panel. Next up, we've got When Washington Moves, So Does the Money, featuring Joseph Lustberg, Mike Goral, Terry Mendez, and Anthony Coniglio, moderated by Scott Greiper. Gentlemen, come on up to the stage. Everybody else, give them a hand. And friendly reminder, if you're staying, move to the middle so people aren't stuck in the aisles. Give them space to sit down so you can all enjoy it.
Okay, guys, we're going to start on our next panel, so if we can get seated and shut the doors and get ready to listen. That's pretty good.
Yeah, you have
Mic
the power.
test.
All right, guys. So this is the only panel that matters today, and it's not because of me, it's because of the topic. Because nothing else matters from what anybody else said, and we've had great industry leaders. But if Washington evolution, federal regulatory evolution, doesn't open up the capital markets in the industry, we're all fucked. So I think this is the panel that matters because this is what the topic is. Is that right?
Of course, that's what we're going to say.
Okay, so you don't have to leave because hopefully we'll have some good news here. So the conversation is, when Washington moves, so does the money. Well, if you looked at the public cannabis stocks and hemp stocks in the last few weeks, the money's moved and it's gone that way. So we're not, the timing is not great here, but it's the truth. Since Viridian at least has been in business, all of us I think have been in business a while, we've had exactly now 2 changes in federal regulatory legislation, and they're polar opposites. You had the Farm Bill, which legalized hemp and 0.3% THC, and nothing happened for 4 years, and in the last 2 years, everybody and their mother is making a THC-infused drink, and it's being distributed by Southern Wine and Southern Glazer, and it's just a huge industry, and now that's dead, or at least for the next year, because they're giving us a year to figure out what the hell just happened. So kind of as usual in this space, there's been no help from the government in really making a consistent, liquid capital markets. As I described a little bit in the opening session this morning, equity investors are dead in this industry. It's all debt, going to the biggest guys with the biggest balance sheet and the most real estate and the most cash flow, and the majority of that is refinancing. It's not new capital. We need new capital. Any industry, even an industry that's kind of topping off in growth, requires capital. We're a supply chain industry. So I think we're going to talk about how we save the day in bringing hopefully renewed emphasis, renewed excitement from check writers in the space. One of the most interesting things we found from the Viridian Cannabis Deal Tracker is the amount of money going into Europe is more than twice what it was 2 years ago. When we used to do our annual, well, where's the money coming? It was all North America, and in the last 5 years, it was all the US, and now Europe is kind of coming up on our heels because it's a more friendly regulatory, federal regulatory environment. Doesn't mean everything's legal, it just means that it's a better operating environment for the players. And if you ever want to know where the US can get in terms of valuations and capital and so on and so forth, go look up what's happened in Canada in the last 10 years. An amazing amount of capital pouring in there, not because it's a gigantic market, not because they're better providers, because it's federally legal. So the check writers don't have to price in the risk of federal illegality. It's a whole different dynamic. So with that being said, you guys can see who's up on the stage here, but I'm just going to kind of go through a bunch of questions we had prepared in preparing for this presentation. So I'm going to start with the first. Anybody that wants to jump in, guys, please jump in. So the first one almost cracks me up. I don't know if this was your question or not.
That's no way to lead into it. Come on.
This is the greatest question I've ever had presented from a panelist. If Schedule 3 moves forward, and I want a date and time, this is your question. How quickly do you think the capital markets will react? Is it weeks? Weeks? Anybody going for weeks? Is
Audience participation.
Audience participation. Anybody thinks the capital market is going to change in a week if rescheduling happens? I'll give you the ABC. Weeks, months, quarters, years. Give me weeks. Anybody for weeks? Ooh, optimistic people. Months. Quarters. Seconds. Years. All right, I'm going to add one more. Never. Okay, I think we got some optimism out there. Let's just go down the panel. What do you think timing-wise, legitimately, reasonably, we'll see an impact on the capital markets?
Let's first define the starting point. When we all say rescheduling, we have to, I think, tether ourselves to, are we talking about the announcement of rescheduling? Are we talking about the implementation date? Because most of us expect that you will get an announcement for rescheduling, and the way it works is there is a 30-day notice period to go into the Federal Register before the actual rescheduling date occurs. And most of us expect that there will be litigation. So I'm going to start the answer by saying, when we have this settled, because I don't think capital moves in until this is settled. So whether when we get through legislation, when we ultimately have a final rule where it is finally Schedule 3, I think it takes probably 1 to 2 quarters. Because if you think about the real institutional money, now, of course, some people will move in sooner than that, but I believe the real institutional money, they'll want certainty before they move, and they have alternative investment opportunities. Let's be real. Organizations aren't just sitting there waiting for cannabis. They're looking at their alternative investment opportunities. And so they'll wait till it's certain. They'll do the work. They'll go to their investment committees, and it'll take at least a quarter or two for all of that to play out. Before we start to meaningfully see institutional involvement, you'll get an initial bump from retail investors within days.
Well, in fact, that's what I was going to add on as a supplement to what you said, and I think what you said is true. Institutions are not going to jump in on that. They're going to reprice models, and they're going to redo models and all. But if you look at the impact of, what was it now, 8 weeks ago, that in some press conference Trump was having with some leader of some country, and he talks about rescheduling, and the cannabis stocks, I think the top 15 public companies were up 82%. The MSOS ETF index was up 80%. I mean, the retail money came flowing back in because there's no institutional money in the public stocks. So I think there's a tremendous amount of pent-up demand on the retail side because this plant is used by a lot of people and they want to make money from it. But I agree with you, it'll take time. Why don't we go down the line? What do you think?
I tend to agree. It's going to take some time. And then, you know, I think people are just been waiting for this moment to happen, that it's like, you know, we've kind of been down this path before where we think, okay, this is the year, it's going to happen. And something always comes up and then it doesn't. And so I think that's going to create a lot of hesitancy. And until it's done, it's not done. And so I think correctly so. The retail investors are going to get in pretty early because they're going to be excited. They've been waiting for this. But institutional investors are going to wait until the dust is settled. The good thing is that once an announcement is made, then I think companies are going to have a much better balance sheet, and so they'll be able to have a better story to tell when 6 months, a year later after the effective date is implemented. Then they'll have a little bit of a track record.
Terry?
So sentiment moves very quickly. So I think the retail investor and the sentiment will move quickly. I think you're going to see 3 or 4 quarters before you see institutional investors come in. But what I'm hoping for is when that sentiment moves in this industry, we see a lot of volatility. That the volatility evens out, and you kind of see people sticking in the stocks for a little while longer.
Yeah, I agree with Terry. It's going to take a little while, at least a couple of quarters, and you know, from our perspective, I think the banks are going to sit back on the sidelines for even maybe a year or two before. That's really what all the operators are waiting for, is the banks to give them 6 to 8% money, much cheaper capital, And I think from a 280E perspective, it'll help drastically all these operators that didn't quite qualify or meet that service coverage ratio at that point. But the actual lenders that have been doing this for many years their risk profile goes down, right? So I think cost of capital will get a little bit cheaper immediately, but it'll take some time.
Can I just come back and just add a little something as I was listening to my colleagues talk about this? It says, so does the money. And so, yes, stock prices will go up, but that doesn't mean the money is coming into the companies in the industry. It just means that the prices of those stocks are going up. Where the money comes into the industry is when they utilize that buoyed stock price to issue new stock and recapitalize the balance sheets by raising new capital, and that's where you need the institutional investment. You're the banker up here. Could you see a 100% retail deal getting done for a $100 million follow-on offering for one of these companies?
Never.
Right. So you need that institutional capital to follow through to actually put the capital into the industry, which then goes towards fixing the balance sheet or expanding the business.
It's a really good point because we've done so much work on what does 280 rescheduling mean. In addition to more cash flow, lower taxes, higher valuations, kind of fundamental stuff, I think it's a further destigmatization of the industry that we're not that screwed up, that we have this crazy tax. I just think it further makes us seem normal.
Yeah.
And speaking
Absolutely.
to investors all day and acquirers like we do every day for all of our lives, there's still a stigma attached to this. You can price risk into a deal. That's what these guys are paid to do. But this is another step towards creating kind of a normalized industry. All right.
It does normalize it, but you have to understand that now it's going to be federally regulated as Schedule 1, right? So a lot more compliance comes into account, and that cost could also be increased.
I'm sorry, if and when it goes Schedule 3, what do you say?
If and when it goes Schedule 3, now it's much more regulated from a federal level, right? So, more compliance is going into these operators' daily operations. That's going to cost a lot more. That cost will go up.
I think that's a good trade-off for the industry.
Yeah,
though,
of course.
Right?
Great trade-off.
All right, I think this next question is from you also. Do you see rescheduling as mostly a tax and earnings story, 280E relief? I think when HHS announced that they were accepting Biden's recommendation in August of 23 that we reschedule, we had a huge jump up in valuations, I think, to around 8x EBITDA, and that obviously trailed off. So valuations are going up, bigger cash flow, less taxes, higher valuations. But back to your question. Do you see rescheduling as mostly a tax and earnings story, or does it fundamentally change the risk profile for investors, lenders, and acquirers? That's where the rubber meets the road. Is it going to create more of a transactionally rich environment? Anybody that wants to jump in?
Look, I don't see that rescheduling changes much in the way of all the other risks to operate. If you're a good operator, it's going to give you more margin and higher valuation. If you're a struggling operator, you might be in that place of either being disintermediated or acquired or needing to fix quickly. This doesn't change all of the requirements to bank the industry. It doesn't change the anti-money laundering, the Bank Secrecy Act. It doesn't change Know Your Customer, and the requirements that financial institutions have to deal with that are different than any other consumer packaged goods company. And so we're still going to see that risk being priced in.
Sure, I'll jump in. Let's be real, most companies are not paying 280E. So when we look at the current environment, it really is not a cash flow impact to 2025 or 2026 because they weren't paying 280E from a cash flow perspective.
I'm going to disagree
Most.
with you midstream here. Ready? I'm breaking every rule of a moderator.
No, this is great.
When we sell a company to XYZ buyer, you think they're paying the full value of the company, or it's the full value minus what you owe in 280E?
Minus the accrued
So
liability.
it has a direct
Yeah.
impact.
Right, but at the time that now we're in a conversation, at the time you're going to price that, even once 280E happens, you still have that accrued liability. Nobody believes it's going away.
True.
So it's really about the prospective valuation of future cash flows that buoys the industry. I don't think it brings in a wave of investment, however, because it's the first catalyst of many that are needed in order for people to really feel good about the investability of the sector, such as the ability to get growth, right? Investors come in because they want a return, and that return comes from a business that delivers growth, grows their EBITDA, grows their earnings per share, the earnings power of the business. So it's not just going to be about getting growth from 280E relief. It's how does 280E spur growth overall to make these attractive businesses for companies to invest into? And I think it takes more than 280E relief. I think then that leads to safer banking, the regulation of hemp that's going to occur, and the expansion of state infrastructure, not infrastructure, but state programs where you're going to grow states and the number of states that have medical and adult use programs.
But I think we also have to keep in mind that investors have a choice of all kinds of investments, cannabis and non-cannabis. So if you're going to choose between, a publicly traded cannabis company versus NVIDIA or some other stock, which one are you going to go for? So I think the risks are still there with cannabis companies. So even without 280E, there's plenty of other investments for investors to get into. There's nothing that requires them to get into cannabis.
So you just played Ed McMahon to my next question, Mike. Thank you. And I think this is, at least speaking on behalf of Viridian, one of the most important impacts from 280 or other federal regulatory reform. So we can't keep turning over the same dollar in the industry because that dollar is now a penny. I mean, there's just not new blood coming in, new capital. If rescheduling happens, if safer banking happens, if whatever happens at the federal level, does it open up a new type of buyer, investor coming into the industry? And I put parenthetically, because I think this is the most important thing, the analog industry of CPG. Big tobacco, big alcohol, big pharma. I'll throw in big industrial, like a Monsanto. Where are they in the cannabis industry? Biggest growers of seeds in the world for 80 years. Where are they in the cannabis industry? They're not. So I believe that this is happening, and it's happening in real time. Certainly on the tobacco side, you look at BAT's activities. I think they have close to $400 million in Organogram. I think they have 3 investments in U.S. Cannabis companies, not state licensed plant-touching companies. A big fat public company like BAT is not doing that. But they've come into North America and even into the U.S. where it's federally illegal. So do you guys believe that the big strategics in analog CPG industries, alcohol, tobacco, pharma, industrial, does rescheduling bring them in? Does something else bring them in? Do they not come in? When do we start to get the big strategic entrance into the market?
I think the first thing you're going to see is a consolidation and a roll-up strategy. You're going to see those operators that are, having the strong balance sheet and have the 280E relief start picking up those companies that are accretive to them. And then in about a year or two, as you see more clarity come out of what it means to be Schedule III, you'll see some more of those strategics come up and pick up those big operators. You got to remember, our whole industry is $35 billion. This is not including the intoxicating hemp side, which makes it larger, but the industry is $35 billion. If you look at the Fortune 500, this industry is a division of a large public company. And so those folks are going to look at this. One, do I understand that the company that I'm acquiring can be compliant with all the SEC rules? Do they have a strong management team? And do I understand what I'm buying? If the answers to any of those are no, they're not buying it.
So do you think...
I think it's a dip the toe in the water because let's remember, Schedule III does not legalize. It's less illegal, kind of? No. I mean, really, the reality is you could legally traffic in a Schedule III substance if you register with the DEA and get a DEA license. Most operators in this industry will not be able to do that, especially if they have the foot in the adult use market. So in that landscape, in a world where you still have a product that's federally illegal, I think it's going to be difficult for the Monsantos of the world to have a meaningful push into the sector. I think there may be that dip the toe in the water, or more likely, as you alluded to, they'll play the international market where it's a safer place to play in that sandbox and learn and wait for more reform in the U.S. market.
That's interesting.
I agree. I think it'll take federal legalization, safe banking, the whole kit and caboodle before they really start to step into our space and, make some acquisitions.
And you got to remember, these folks trade on the NASDAQ, they trade on the New York Stock Exchange. Those rules have to change to allow them to own a plant-touching entity. They're not going to give up their listing in order to jump on this opportunity.
So this is interesting, Terry, because can you tell me if there's an actual law prohibiting J.P. Morgan Chase or the New York Stock Exchange or NASDAQ from listing a plant-touching company? I don't believe such a law exists.
It's just their rules. It's just the NASDAQ rules.
So I think you've said something about rescheduling may change that, or there needs to be changes that would allow the senior exchanges to list. There's nothing that prevents them from listing plant-touching companies today. So when does that switch come?
I think it's around clarity. Right now, when they reschedule to 3, they're looking at this and saying, is this Pfizer? And Pfizer has plenty of Schedule 3 drugs that they sell. Or is this something not Pfizer yet? And does the exchange itself have any particular risk? And if the exchange is not going to put itself at a risk, until there's clarity, you're not going to see that change.
So I'm going to take the other side of this and say there isn't a direct law that prohibits them, but it's an illegal business. And so I'm going to be controversial, should they be listing heroin dealers? Should they be listing child pornography sites? You'd say, oh, that's illegal. They shouldn't list it. This industry is illegal. And so
I
the only way you
I
get
don't think
listed,
those products are legal at a state level either. So I don't know if it's
yes,
comparable.
That's true, but they're not state level regulated, they're federal regulated, and so they're worried about anti-money laundering and about all these banking that, Terry, you know very well about. So I think they look at that. Now, having said that, there are a couple of companies they've grandfathered, New York in particular, that did have these types of activities, and so it's a little bit talking out of both sides of their mouth. But I think that's why we need safe banking with the right definition of financial institution to give them the safe harbor so that they can feel like they can list these companies without the threat of prosecution for aiding and abetting under the AML rules in the country.
I think that's the dividing line. I'm not sure if it was IIPR or Tilray that was the first NASDAQ-listed cannabis company.
Tilray. IIP's New York.
So I'll go back to my, what the hell is that? What is that? Why isn't it True Leaf? Why isn't it Curaleaf? Why isn't it GTI? It's because Tilray's in a federally legal jurisdiction. So, and I also learned over the years that it's not only reputational risk, it's the cost of doing business in this industry and filing a SAW report every time there's a deposit in a bank. It's not worth the cost of doing that business. That's what I kind of understood.
That's why you're not going to see J.P. Morgan or Chase or Citibank or Wells Fargo jump into this industry. What you're going to continue to see are regional banks and credit unions taking a shot at attracting the $35 billion. I mean, look, the projections are pretty nice, right? We're growing at about 11.5%, 12% CAGR. We're supposed to be a $75 billion, $76 billion industry by 2030. It's not small. Safer banking will allow more of those regional banks to take a risk and allow for, but it doesn't change the actual requirements underneath the FinCEN letter. It doesn't really change the Cole letter very much. And right now you're asking banks to be responsible for making sure minors don't walk into a dispensary. That's not what a bank normally does.
Mic drop, please. Okay, let's go back to getting new money into the industry. We talked before about what's going to open up the landscape for the big CPG strategic players to come in, alcohol, tobacco, pharma, industrial. What about the investor side? Where's private equity? Where are the hedge funds? Where are the sovereign wealth funds? Where are the big family offices? What do you guys see as on the institutional capital side, particularly the equity side, because the lenders are here? Which of those groups that have primarily stayed on the sidelines with rescheduling or safer banking or some reform, which of these groups do you see coming into the industry and placing bets?
Look, I'm looking for the family offices to come to the table. We've been working really hard with some of the family offices to bring new money and new capital into the business. We just closed ourselves a $25 million recapitalization with an investor that was previously investing in cannabis. So, they're there and they're waiting on the sidelines. They need education, and they need to understand that the models here make sense to them, and they don't, right? 280E doesn't make sense to a normal, financial model.
I think the private equity won't be for a while because of the life cycle of those funds and how they're structured. You really have to have line of sight to the takeout. And I don't think any of us have really line of sight to a takeout. So I think they are on the sideline. I think it'll be the family offices. But again, it's going to be organizations that are oriented towards growth businesses. So this has to return to a real growth story. And we have some of that depending on what your state exposure is. You can get back to a growth story. But I think it's going to be more likely the hedge funds that could step in here and do more structured investments as opposed to, say, private equity in the near term.
For us, me and my brother are operators in New York, and, we raise equity, and the only way for us to be able to do it is family and friends. And it's just the reality of the situation, especially if you're a small operator trying to open up dispensaries or cultivation. Go to your family and friends who haven't been tainted by this industry, and that's the best way to do it.
Terry, the recap you did, was this a single family office? Is it a multi-family? I'm just curious when you mentioned that.
Yeah, so we worked with a couple of folks. So there's about 20 folks that participate in the recapitalization. We cleared off about $19 million of debt, raised about $7 million in cash, and a combination of individual investors to family offices to a private equity fund in New York.
Amazing. Congrats.
Thank you.
Well, that's contrary to my view that private equity is good. Clearly they...
Where's the red
you should have
button?
asked that question before I went.
We need the red button to eject you from your seat for an improper response. I have more questions, but I'm going to throw it to the panel. What do you guys want to talk about in regard to what this topic is about? What does federal regulatory reform really mean to the capital markets in the industry, in your specific business?
Yeah, so for us at Upwise Capital, it gets rid of the 280E burden potentially, gets certain operators that didn't qualify for a term loan or an equipment financing loan because they didn't meet debt service coverage ratio, gets those operators to a point where they can now qualify for those loans. And really for us, that's what we see from this in the future, or at least the immediate future, once, rescheduling does happen. But new capital providers, lenders, banks coming into the space, like I said earlier, I think that's going to take some time.
Look, Safe Harbor is in a position where it provides the rails for banks to bank cannabis and to lend to cannabis companies. There are 92%, there's about 10,000 financial institutions, 92% of them do not bank cannabis in any way or intoxicating hemp. Anything that, safer banking, deregulation, or Schedule 3, anything that brings some of those banks to the table helps Safe Harbor be successful, helps the industry be successful. And so, when I look at this, I'm saying Schedule 3 is a good first step. Safer banking is a good second step. There's regulations out there like States Act 2.0, but when banks feel that they have the ability to lend to this industry, the banks are a good source of new capital.
I think what we've seen, with the hemp industry over the last several years of what could be cannabis, when you don't have, all these regulations that restrict you from having interstate commerce, you don't have 280E issues, you operate more freely like a real company. And I think that's going to serve us well, going into the future to see like what this industry could be.
Yeah, Scott, when I thought about this panel, I thought about what does reform mean in terms of bringing money into the sector. I thought about it more in terms of a domino effect. I don't think there's any one panacea. I don't think there's any one thing that is that one thing that makes it happen. I think Schedule 3 is a monumental step forward for the industry for all the reasons we talked about. But then I think you follow that with a safer banking and that creates more catalyst. And then you get into what I call the positive feedback loop. And this all gets back to the balance sheet and the growth. And when you get in this positive feedback loop, equity prices should go up. I think we could all agree on that. When that occurs, businesses can recapitalize their balance sheets, makes them more investable, means their valuations increase, means their stock prices should go up because they're repairing that balance sheet over time, notwithstanding the dilution. I think that's positive for the industry. And then you also get the domino effect at the state level. I mean, 2 months ago, the Indiana governor said, if we get Schedule 3, I think there are a number of state senators that will finally move to the yes column to get a medical program in Indiana. And I think you're going to see that, whether it's Georgia expanding their program, Texas expanding their program, North Carolina finally getting. So now when you start adding all of this up, you're getting capital coming into the sector, you're getting growth because of these state activations, and it's this self-reinforcing positive feedback loop that gets us back to where we were in, say, 18, 19, and 20, when many of us started out here.
Yeah, it's a really good point. We're going to wrap up soon, but we need to speak about safer banking and safe banking and whatever it was called for the last 10 years. Because I believe for 7 years in a row, safe banking had passed the House, never got to a vote in the Senate. I think it got to a committee in the Senate last year, which means it never got to a vote in the Senate. And I believe safe banking is probably more important than 280E and really changing the infrastructure of the industry from a compliance perspective. What do you guys think or hear about safer banking? It's not really top of the conversation. Rescheduling has usurped it. What are you guys hearing on safer banking? Terry, you should be in the know.
Defer to the banker.
Look, what is safer banking? At the end of the day, it provides a regulatory framework for banks to unbiased banking cannabis and make cannabis deposits not kind of set aside by regulators. And right now, if you're banking cannabis, that's the first place the regulators look to see if you're meeting all the requirements to bank cannabis, and it puts it on a normal footing. At the end of the day, though, all of the requirements that are set out for Anti-Money Laundering, Bank Secrecy Act, et cetera, remain the same, and it is complicated. Remember, every single state that allows for cannabis, whether it's regulated adult use or medical, the municipalities within those states also have their rules. So if you're in Colorado, you might be able to get recreational cannabis in Denver, but you only can get medical in Colorado Springs. In Long Island and New York, there are, Nassau County has so far been very harsh on the cannabis industry, where Suffolk County has several dispensaries that are up and running. So you need to know the rules in every single one of those locations. You need to be able to apply those rules, and then you're liable as the bank entity if there's any mistakes. And so safer banking, it levels that playing field a little bit. It tells regulators exactly what they have to regulate on. And it's kind of a interesting joke inside the industry. It says, depending on your regulator and if they're cannabis friendly or not, it turns out whether or not you can bank cannabis. So we tried to kind of put that aside and say, let's figure out a common platform for banks to bank. And once banks can feel comfortable there and they get understanding of the lending platform, then you'll have banks lending as well. And so, again, we're very hopeful to see that happen. 92% of your bank sitting on the sideline is a tough place to be.
All right, guys, we're getting kicked off. Thank you, everybody, and thank you to our panelists.